Okay, so first I want to introduce myself. If anyone has trouble understanding my English, feel free to write in the chat. I can speak more slowly or use simpler words, but there's many concepts that we're going to cover today. Um, Thank you. I'll talk to a little bit about who I am for a minute, and then I'll jump into the topic at hand. So I'm Jonathan Karras. I live in Jerusalem. I am originally from Washington, D.C. My background is in computer engineering. I have been involved in the blockchain community for a little over 4 years. Blockchain is a technology that combines many different aspects of our lives. It enables for the creation of new types of computer applications, for new types of money, and for new types of business opportunities. I am a partner at an investment firm that invests in blockchain technologies and blockchain companies. That firm is called Lions Chain Capital. I also work for a cryptography company that's based in Israel that focuses on building privacy and scaling solutions for companies that are building in the cryptography and blockchain space. One of the companies that I'm going to be speaking about at length today is an organization, a foundation based in China that is called Nervos Network. And the reason that there's a lot of opportunity for us is that China is an emerging economy that offers for many opportunities for people anywhere in the world to build businesses that can profit off of the growing um, infrastructure that is building within the Chinese ecosystem and the surrounding area in the world. So even though we may be located very far away from China geographically, we can build businesses that can interact with a billion people that are living there today that are looking for innovation and opportunity in the businesses that we can create. So I'm assuming that most of the people on this call are not experienced with blockchain technology. So I'm going to start with some foundation and background as to what is cryptocurrency, what is blockchain, and I hope that everyone can see my presentation. Let me know if you see the screen that I'm sharing. Just
Yeah, we can.
good? Great. So I titled this Building Your Next Startup on Blockchain, also during a pandemic, because we can't forget that we're in a unique world situation, and that world situation actually brings to light a lot of the value that is found within cryptocurrency and blockchain. So the history of cryptocurrency goes back to January 3rd, 2009. This is when the very first cryptocurrency was launched. It was called um, it was called the Bitcoin Genesis block. The Genesis block of Bitcoin contains the headline from the Times front page: "Chancellor on the brink of second bailout." This signified that Bitcoin was an act of civil disobedience from the current financial system, which rewarded bad behavior and created faulty systems with no consequences. Printing money has a long-term impact. I'm sure many of you are familiar with the concept that many years ago, 50 years ago, 100 years ago, that the purchasing power of printed currency, specifically things like the US dollar, were much stronger than they were before. So the are there certificates to attend? I don't believe so. Meaning anybody can participate in building companies within this space. That's one of the beautiful things about this industry. So since the creation of the Federal Reserve, and that was in 1913, the U.S. dollar has lost roughly 95% of its purchasing power. Now, some people would ask, why is it that things are more expensive today than they were for our parents or our grandparents. And the reason is that there is nothing that prevents government, and specifically a large government like the U.S., like the United States, from inflating their currency as a way of being able to pay back debt. Now, this is part of a global monetary policy, and it is something that's important to understand on a global macroeconomic level. That what that means is that if you have debt as a government and you want to pay back that debt, you have three options. You can either tax your citizens and take that money and pay back the debt. You can create profit. Unmute. You can make profitable entities and then take the profits and pay back that debt. Or in the case of currency that has no reserve, that this is currency that's called fiat currency, you can simply print more money and then use that money to pay back debt. Now, the case when you take that third opportunity, that you print money and use that money to pay back debt, so that creates inflation, and that means that the buying power of the money that you have created goes down. That money becomes less valuable, and you cannot buy, and the price of goods and services goes up. So printing money is a silent tax on all citizens. Now we see that it wasn't just in times like 1913 or in 1971 when the U.S. finally demolished the connection to gold, whereas money used to be connected to gold, at least in the United States, that today we see now more than ever that money is being printed and used to pay off debts or distributed to citizens as part of the $2 trillion stimulus package, which was already distributed in this year. And to put that in perspective, the U.S. government has printed more money in 2020 than the U.S. government printed in all years since the founding of the country. So more dollars were made this year than the total amount of money that was ever made before. And because the U.S. Has such a large economy, this doesn't have an impact only on the U.S. economy, but it has an impact on every economy in the world. The federal balance sheet just passed $5 trillion of debt in the first time in its history, and the Federal Reserve is expected to increase the balance sheet, essentially to double it, in the quantitative easing, which will occur over the next 5 to 10 years. Now, we've seen on global scales that this isn't only impacting America. Also, in Europe, there's almost $1 trillion that's being made as a stimulus, and the previous limits on money printing have since been destroyed. Now, why is this related to cryptocurrency? Well, cryptocurrency is founded on the concept that you can create a money, and that money will not be in control of any one individual. That the money that is created, Bitcoin, for example, there is no single entity that controls Bitcoin. Anyone in the world can operate the Bitcoin network, and anyone in the world that wants to can use Bitcoin as a means of exchange or a storage of value. Now, the interesting thing about Bitcoin is that when it was created by a group of anonymous programmers under the name Satoshi Nakamoto, that it was created with 21 million Bitcoin in existence. Now, Bitcoin can be broken down into very small parts, so it doesn't matter exactly what the exchange rate is. You don't need to buy a single Bitcoin. You can buy or sell a very small part of a Bitcoin. But the fact that there's only 21 million Bitcoin and there only ever will be 21 million Bitcoin means that when governments continue to print more money and to devalue their own currency, as we've seen many times in many places of the world where there's been hyperinflation, that hyperinflation will never be able to impact the Bitcoin economy. There will only be 21 million Bitcoin, and no government can turn Bitcoin off, and no government can change Bitcoin or change the monetary policy. So this means that citizens, through a form of almost a passive revolution, can decide to participate in an economy that cannot be inflated away by government spending or through stimulus packages. Now, this concept has gained lots of attention, and like any innovation cycle, it has gone through evolutions where it becomes very desirable, and then over time it attracts a lot of hype, and that hype will price in to the exchange rate or to the value of that market far beyond where the current market should be priced. And so we've seen this a few times in both the creation of the internet, going back from 1994 to 2004, where the vision in the early 90s or mid 90s was that everything would quickly go onto the internet, that we would buy our groceries from the internet, that we would watch our movies from the internet, that we would buy a pet or a dog, that we would meet our husbands and wives, that we would pay our bills over the internet. And when this vision was articulated in the 90s, which was right around here, that's when we had a large spike to the value of the internet companies. The problem was that while that vision was correct, and today we do perform many of those actions that I just described, at the time in the late 90s or early 2000s, the infrastructure was not in place and the adoption was not in place to justify the high valuations. And that led to a crash. And that crash lasted for about 10 years, from 2004 until about 2010 to 2014, when the technology caught up with the vision. When the technology caught up with the vision, if I could actually see where we are, I think you can see my mouse, but we're actually at a continued line upwards to about here. We're about double or triple the NASDAQ composite is today as it was back in the 90s. Now, hope I got another question. The NASDAQ is that's a great question. This is a composite of some of the most influential companies in America. So companies that run technology like Google and Facebook and Apple make up a large portion of the NASDAQ. And the NASDAQ Composite Index is a way to track their general progress. So now let's compare that to what happened with cryptocurrency. Cryptocurrency was created back here in the year 2008. It was launched in 2009. And roughly for the first 5 or 6 years, it had almost no economic activity. There was nothing that you could buy with a Bitcoin. There was nothing that was being built on blockchain technology. It had really no use outside of hobbyists and some passionate people that were very excited about the concept of non-government sovereign currency. Now, what happened around 2013, 2014 was these initial spikes where Bitcoin went from being worth $1 to $100 and then subsequently crashing back down to $50 or $20 and then up to $1,000 and then crashing back to $200. And then we saw in 2017 was where the concept of non-sovereign currency became a major topic. It became a topic that governments were speaking about. It became a topic that that tech companies were speaking about. The concept of privacy and self-sovereignty became real issues as we moved into a more and more greater digital world. And that's when Bitcoin, over the course of a few months, rose from being worth about $900 to being worth about $20,000. Now, as just like what happened with the introduction of the internet, that subsequently crashed. And roughly over the course of the next 2.5 years, we had a market cycle of ups and downs, bringing the industry back to reality, to reflecting where we were. And this is really where my fund, as an investment fund, began investing in the space. Now, what are the concepts that I want to cover? And some of these we've already spoken about, but some of them will be are questions that I'm hoping that after you listen to this lecture that you'll understand. That is questions such as, what is Bitcoin, which was the first digital currency, and what is blockchain? So blockchain is a distributed network. It's a way to be able to run a series of account balances without having any central account manager. And that's what makes it so powerful. And what is crypto? Crypto is a collection of services that are built on top of blockchain technology, usually for the means of organizing payment structures. Now, what makes Bitcoin important? We've spoken about that briefly, is that Bitcoin offered into the world a way to return back to what money has been for thousands of years. If for thousands of years, currency was created as something that actually took work. If a king wanted to mint more money, then he would actually need to get more gold and more silver. He couldn't just decide, oh, I have debt to pay, I want to hire an army, or I want to build a new castle or build new roads. I will just print money out of paper, which grows on trees. No, what he would actually have to do is he would have to balance his books, and he would have to build into the treasury more gold and more silver and more copper, and then he could mint more money. And that's how money existed all the way up until about the 1930s. It's a really recent concept, this concept that money is something that governments can just create with no backing as a means of taxing their citizens. So now you might ask, why don't we just go back to gold? Why don't we just rebuild and use dinars or lira or any of the currency that was used for hundreds or thousands of years beforehand, that was actually minted by silver and gold? The problem is that we live in a digital age today, and that it's impossible for us. So much of our commerce needs to exist in a format that it can live in our pocket, that we can send money with an email, that it's really essential that there exists a digital form of gold. And Bitcoin was created to become a digital gold. Now, I want to introduce, and I'm going to introduce it in more in depth, of the second largest cryptocurrency, which is Ethereum. Now, whereas Bitcoin's distributed computers manage the Bitcoin wallet addresses and their balances, meaning that if you have on your cell phone or you have on your computer or a USB stick a Bitcoin wallet, and you have a certain balance there, that's managed by the miners of the Bitcoin network, which roughly today there are over 100,000 individuals that are independently participating in the management or the ongoing existence of the Bitcoin network. And they do that by running something called a Bitcoin node. And you, from anywhere, it doesn't matter where you live, you could be living in New York, you could be living in Gaza, you could be living in Argentina or in Iceland. It doesn't matter. You can be a participant in the Bitcoin network and you can collect fees for providing services to allow other people to be able to transact in Bitcoin. And this is true. I have another question here. Isn't there a tax on owning Bitcoin? Bitcoin is taxed as a property, as something that you own, the same way as owning gold. So if you were a gold miner and you went out and you found gold, or you were a merchant and someone paid you in gold, so then you would have to pay taxes on that. The same way that you'd have to pay taxes if you bought real estate or if you bought any other type of precious metal. So yes, if you want to use Bitcoin because you want to avoid paying taxes, you probably will not have a good time. The Bitcoin network is also open. So that means that anybody can see who owns Bitcoin and how much Bitcoin that they own. It's actually much harder for illegal activities to occur on Bitcoin because it's so easy to track a person's account balance. So yes, if you are involved in Bitcoin, then you should be prepared to pay your taxes, as with any other business that you want to build. In most businesses, the goal is to be as successful as possible and to minimize elements of friction as much as possible. And getting in trouble with the government is not a good way to minimize friction. But if you also, one of the things that's very interesting about cryptocurrency in general is that there's more and more favorable feedback from governments all over the world, whether it's the EU or Europe or the United States or China or many other nations are now adopting. They're recognizing that Bitcoin and other cryptocurrencies are not something that's within their power to stop. The same way that they can't stop people sharing content over the internet. The same way they couldn't stop email because there is no centralized server. There's no button to push to turn it off. And as long as this is the case, then governments will recognize that if they can't fight it, so then they have to figure out a way to benefit from it. And what we've seen over the last really 5 years, but even more specifically over the last year, we've seen governments all over the world adopt very sensible viewpoints on how they will interact with cryptocurrency in the future. Now, an introduction to Ethereum. Ethereum is the second most popular cryptocurrency, and it's a base model for a new way to build businesses. Ethereum is and I'll address this a little bit later in this slide, in other slides, but unlike Bitcoin, where Bitcoin only allows you to manage Bitcoin, Ethereum is a network that anybody can use to build their own business. That's a financial business, financial technology, often known as fintech, to build a fintech company that can have global reach, that anybody can interact with, and can never be shut down or turned off. Now, the most interesting thing that's come out of the creation of Ethereum, which was created initially in 2015, but really took off in 2017, when the market did this. So Ethereum became a home for many decentralized financial businesses. So these were businesses that were created all over the world that were potentially can be accessible by anybody in the world and can perform many financial services and take fees on those financial services. Now, while Bitcoin was the first digital money, and Ethereum was the world's first digital environment for building financial businesses, both of them were version 1s. And as we've seen with many things in the past, I have another question. If I recall, Japan was the first to ban Bitcoin, but now they're the first to release a government-backed cryptocurrency. So it's not Japan, actually. That's China. So China actually last week launched their first version of a Chinese-backed cryptocurrency. And China has banned Bitcoin about 30 or 40 times. What they found with each banning of Bitcoin is that they didn't actually have a enforceable way to protect that ban. And so, like many governments, when you realize that you can't stop something, so then you try and figure out how you can profit off of it. So China actually has not only reversed their ban on cryptocurrency in general, they're now one of the countries that are investing the most in its growth. Nervos CKB is exactly one of those companies. It's a foundation that came out of China. It's a global foundation. It raised roughly $100 million, primarily from those either from China or investing in Chinese industries. And it has a goal to be one of the foundational technologies for building crypto businesses in not only the Chinese market, but homegrown from the Chinese market, and to reach out on a global scale. Similar to how things like Alibaba initially started at home and then grew to be some of the largest companies on the global scale. And then last but not least, I want to discuss today about how this technology is going to affect you and what opportunities could be relevant for your entrepreneurial endeavors. So as we've said, Bitcoin is a little over 10 years old. It was developed by Satoshi Nakamoto. The innovation that actually came was solving the double spend problem, meaning that if there's no central entity, how can we ensure that when I send you money, that I can't also send it to someone else? This is something called digital scarcity. And it's a digital asset that's unlike any other digital asset, cryptocurrency is, because if I have a picture that I take with my phone, which is also a digital asset, if I send it to you, then I can't send it, then I am unable to send it to anybody else in the world. I can send 1,000 copies of that. So from 2009 to 2013, Bitcoin became a worldwide phenomena, and the word blockchain was born. Blockchain is a term given to the process of updating this distributed ledger, the Bitcoin ledger, which tracks the movements of Bitcoin between public keys, which are wallets that you can hold on your phone, hold on a USB key, or hold on a computer, even print on a sheet of paper. Hold on. Bitcoin's just a currency. Ethereum is a platform to build decentralized network. That's exactly right. In terms of investing, it's outside of the scope of this conversation to really talk about investment advice. But what I would say is do your own research and never invest more than you're willing to lose. That's a common phrase in this space. Just like how if you invested in the first version of web search technology, you would have missed Google because Google didn't exist yet. You would have invested in Metacrawler or AltaVista or something else. So it's important to just become familiar with the space and to recognize. Now, in terms of building, you can't really build on top of Bitcoin, but you can build on top of smart contract platforms like Ethereum, as Raid mentioned. So if we look again, and I mentioned some of this, but we'll go into more detail. We had an ecosystem grow really throughout the years. And then in the fall of 2013, we had the first growth, as I mentioned, to 1,000. And then something very interesting happened. There was the first major heist of Bitcoin. And then that was called the hacking of Mt. Gox. Mt. Gox had over about 70% of all the Bitcoin volume. Now, what's interesting is that because all of this was technology that was homegrown, many of the services that protect financial infrastructure with insurance and things like that were not possible or didn't exist in the cryptocurrency industry back then, back in 2013. Many of those things do exist today. But when the first largest exchange was hacked, and again, they didn't hack Bitcoin itself. What they did is that they were able to steal Bitcoin that was stored on an exchange by hacking into the exchange, most likely from an inside job. The safest place to store Bitcoin, if you choose to store it, is actually on a wallet that you can control the private key for. If you control the private key and that private key is not stored in any computer or anything connected to the internet, it is, at least to date, impossible for anybody to be able to steal it. Once it's on an exchange or it's on a wallet that the private keys are stored somewhere on the internet, then whoever can have access to that exchange or to the place where the keys to your wallet is stored, so then there's potential for it to be stolen. So after this catastrophic event for the crypto industry, we went through a cooling off period, and this is when the first market crashed. And this is when there was actually a great opportunity for innovation, where people wanted to know, well, what can you build on using the technology of Bitcoin, but that's not specifically Bitcoin itself. What can we use blockchain technology for? So nobody knew if Bitcoin, which is the short form of writing it is BTC, nobody knew if this was going to be something that would regain its economic stance after the market corrected. And people began experimenting on what could be built using the same technology. To date, there haven't been meaningful examples of permission blockchain technology, meaning one private business issuing their own, but there's been many exciting things that came out of public blockchains being built, especially programmable blockchains that allowed for anybody to be able to build a service or business on top of it. So that created the concept, which initially started in 2014, called smart contracts. So there was a person named Vitalik Buterin. He was a writer for Bitcoin magazine, and he proposed that Bitcoin would be much more useful if you could write scripts, if you could build applications on top of Bitcoin. This was very complicated to organize, and it involved lots of changes to Bitcoin, which the Bitcoin community was very apprehensive about initiating. Making changes to Bitcoin offers attack vectors, areas where it could be exploited or changed. And so it was eventually decided by Vitalik and some of the other people that supported his vision to create a new blockchain, which was similar to Bitcoin. It had its own token. It was called Ethereum, and it had its own token called ETH or ETH, and it would be used as payment for running software on top of the Ethereum network, which would be viewed as a world computer. It was a more generalized application of a public blockchain technology similar to Bitcoin. And because of the ability to program arbitrarily complex logic around this, many other entrepreneurs and developers began building their own companies and businesses on top of Ethereum. Unfortunately, some of the fears that were expressed within the Bitcoin community about adding complexity and complexity being an opportunity for attack vectors came true 2 years later in 2016. There was an investment fund which was called the DAO, which was created in 2016, which raised about $150 million in May of 2016. A few months later, there was an exploit which allowed for attackers to siphon off $50 million of that fund and then disappear with it. The community was broken and decided to perform something called a hard fork, which meant that they would reset the balances and they would start over, essentially creating a new form of Ethereum, which is the Ethereum that happened today. This has been very controversial in the crypto world, but looking back on it in hindsight, it actually enabled the crypto community to move on and to learn from many of its mistakes. A year later, we had the concept of initial coin offering. And this was something that enabled for anybody to build a business and then to allow that business to issue its own token, its own cryptocurrency on top of Ethereum. Now, what we had was today over 4,000 different types of cryptocurrencies, many of them representing stock in a business that can either be the rights to future cash flows, or it can become a currency that can be used within a small network. That network can be something like online storage, like Filecoin, or data processing, like Golem. It can be payment methods for viewing advertisements, like Brave. It can be ownership in virtual reality, like Decentralized. And then it also led to other more advanced smart contract platforms, like, for example, EOS, Tezos, and Definity. Each one of these blockchains began to address some of the challenges of creating businesses on Ethereum, and they're definitely worth becoming familiar with. These networks promised a vision which is called today Web 3.0, where software networks could be owned by their users, who would reap financial reward equal to their contribution in the network. And this is similar to why is YouTube so popular today? It's so popular not because YouTube did something brilliant, but because the communities, the content creators that rallied around that content that was created. The same is true today with TikTok. TikTok is worth billions of dollars, but TikTok didn't create the content that all brings us back to watch day after day. The funny videos, the dance, the instructional content, even news you can watch on TikTok and YouTube today. But yet the people that are creating that are creating this content, they're not the ones that are receiving the financial benefit from it. It's usually the owners, the private owners, or the early stage investors that are receiving all of the upside. Part of the vision of crypto is that there will be the existence of future networks where as you create content, you're rewarded in equity for that represents the value that you bring to the network. And that equity is expressed through a form of a cryptocurrency, and then the profits that are generated by that network are programmatically distributed to the content creators of the network based on their ownership of the equity token. Now, all of this concept of the ICO, of creating your own token and building a business around it, it goes back to 2013. It became very popular in 2017. By the end of the year of 2017, there were over 18 websites that tracked the growth of these businesses. And companies like Brave, which is a very popular privacy browser, which will pay you cryptocurrency to see ads, it was able to raise $35 million in 30 seconds at the right place at the right time and with the right product. Kick was able to raise $100 million. And by the end of the year, there were nearly 50 offerings a month. With Filecoin, which just recently launched, was the highest grossing fundraise at over $250 million. But like anything, by the end of 2017, with 40% growth isn't sustainable. And we ended up with this chart, as I started the conversation with, this massive drop, because things got way ahead of themselves. Now, during this time, as cryptocurrency became mainstream, and this was at the point where where everyone in the world knew what a Bitcoin was. They might not understand exactly how the technology worked, or why someone would want a Bitcoin or what value that it provided, but as it became more and more popular and people used it more, then the cost of transacting on the network rose. From the point where at the beginning of the year it might have cost less than $1 to send Bitcoin on the network, at the height, while everyone was trading aggressively and scaling solutions had not come into market, it got up to about $35 in order to make a transaction. Now this slowed the network down and really put a stop to the party. This also created an opportunity for the largest and most coordinated attack on the Bitcoin network ever, where a group of operators got together and created the Bitcoin hard fork, where they tried to relaunch a copy of the network, calling itself Bitcoin Cash. Now, since to date, Bitcoin Cash, they poured hundreds of millions of dollars in attempting to take over the Bitcoin network, and they failed at it. This was a phenomenal success story at the robustness of cryptocurrency and its ability to be able to weather the storm of a coordinated attack. And as I said before, when this happened, the attack, the heightened evaluations, the speed at which everyone was raising, it led to an 85% crash. And the market caps went from $800 billion to $100 billion over the course of 2018. This was because of many scams. It was hard to value the companies. The regulatory environment, again, over the course of 2016 to 2018, China, in of itself, banned Bitcoin over 20 times. And then there were lots of companies that were promising many things, but there was very little actual products that you could interact with. Now, during this, what we called crypto winter, something very interesting happened. Again, just how the crash in 2014 of Bitcoin led to the innovation of smart contracts and the creation of Ethereum, so too the crash of 2017 led to the creation of decentralized finance. This was something that was a revolution in the industry, where decentralized finance created protocols which could become financial building blocks for actually building banks and banking tools powered by smart contracts like Ethereum. This meant that you could do things like create synthetic assets, that you could create coins that were pegged to real world currencies like the dollar and the yen, and the yuan, and all kinds of other of currencies. You could create derivatives. You could create prediction markets where people could hedge themselves against stuff like the amount of rain that would fall in a certain region, or whether or not there'd be a wildfire in California. You could create insurance protocols. You could create borrowing and lending, and advanced wallets that would have protection like max amount of withdrawal per day, or whitelisted addresses, so that you could have wallets that were more robust and had precautions against theft in them. And over this time period, from 2018 to the beginning of 2020, roughly $1 billion of US dollars was locked in these DeFi protocols. What that meant was that it wasn't actually just the valuations of the companies, but it was actually this amount of dollars was put into these banking systems and was utilized for decentralized exchanges, synthetic assets, and the rest of this list. Now, if we fast forward since the beginning of this year to today, we see that over the past, since 2018 and 2019, the creation of a robust set of banking tools and startups, things like asset management tools, analytics tools, exchanges, development infrastructure, lending platforms, being able to know your customer and do fraud prevention, derivatives, margin trading, coins pegged to US dollars, marketplaces, community funding management platforms, prediction markets, insurance. All of these types of businesses grew out of the crypto winter of 2018 and 19. And if I was to actually show you a list of where we are today at the end of 2020, it actually is about 3 times as many companies on the list here today. So the robustness of this industry has significantly grown. And then with that, we've seen, whereas when we go back to the beginning of the year, when there was 900 and what was that number exactly? $963 million at the beginning of the year. Today, we're sitting at $11.29 billion. I took this as a screenshot from today. So we've grown about 13x, 12x since the beginning. And this has been phenomenal. It has created new opportunities as it's become easier to launch businesses in this industry. Then it has now put entrepreneurs in a position where they can build businesses and utilize or attract easily portions of this growing $11 billion. I anticipate that we're going to see, in the next 12, oh, we've got a question. Let's see. Thank you. Real important topic. Yeah, thank you. It is, the opportunity here is amazing. And especially in our region, like like being here in the Middle East, being able to work on a global scale and being able to interact with financial institutions in North America and financial institutions in Asia, we're really in the center of the world here. And we can, we have an amazing opportunity to capitalize on this. These business models have been, founded, have matured a lot. This is actually, I'm not going to get into this now, but if any of you like, I actually, there was a large economic forum that occurred around the evolution of cryptocurrency that happens on a regular basis. And this year, I was invited to speak about the evolution of building financial ecosystems, sustainable financial ecosystems within the blockchain industry. So that this is one of the architecture for building a business, which is a little outside of the scope here, but I'm happy to share the link to the full lecture and more information on the concept with anyone. So what we've really done over the last year is recognize the true value proposition for this technology, which is permissionless financial settlement and organization. Meaning that we can organize people from all over the world to work together for one financial goal. And it doesn't matter what your background is. It doesn't matter, how you grew up. In many cases, it doesn't matter what your language is, just who you are. It's just, if you believe in creating a future with financial equality, and borderless financial opportunities, then this industry offers something for you. And the next step in this progression is the creation of remote organization and decentralized businesses, which issue their equities, their stock, and capture their revenue and profits entirely on blockchain infrastructure. And that's real today. What did I do? Oh, I clicked. So the link is here. I can share this. Sorry, let me go back to... No. Exit here. Sorry, we're having technical difficulties. I did it again. Sorry, guys. Where's the link? There's the link, so don't click the link. Okay, next slide. Whew, I did it. All right, so we can look at some of these profitable businesses. So here are some of the top earning companies what have they earned primarily in 2020? Because many of them didn't exist before 2020, and they for sure were not profitable. So Ava has earned $10 million this year. Balancer, $39 million. Bancor, $1.5 million. Compound, $41 million. Curve, $17 million. DYDX, $1 million. And these are distributed teams. These are entrepreneurs that are just launching crypto businesses, and then anybody can use them anywhere in the world. And this isn't funny money. This is actually U.S. dollars that they're paying, because again, one of the innovations that we had from 2018 until today is that the most popular currency that's actually being transmitted is being measured in U.S. dollars, or the equivalent. Some of it's in Great British pounds, some of it's in yen or won. So it's growing. Now, we have seen here that it's creating censorship-resistant hard cap money like Bitcoin. We're creating multi-asset settlement layers, where anybody can build a service that can be accessed from anywhere in the world and capture that value, provide settlement. We've got permissionless innovation, where you don't need a degree, you don't need to sign up, you don't need to be accepted by anybody. You can just build, and anybody can come and build on it. There's actually, I'll show you. I'll just pause here for a second, because this is. Oh, we got another question. Please share with these links and the recording. I will do that. And again, I'm very active on Twitter and Telegram, so happy to answer any other questions. Instadap. So the two guys from India, about 2 years ago, built Instadap, which was an idea that they had to make they said, wow, there's all these other companies that are building. Let's see if it lets me log in without showing my account balances. So is it going to show? No, maybe I can just pull up a picture of it. Sorry, guys. I'm not going to show you my bank account here. Instadap. Let's see if. Okay, we can look at just the picture here. So they decided, you know what? A lot of these tools were kind of hard to use. So we were going to make a kind of like a front end that would be a platform that would help you manage your funds, your loans, your account balance in various different currencies. And we would provide lots of tools for it. And so if you look at how they've been doing, and they were just two people that launched, they built it, and it started gaining some traction. And today, let's see, where are they? They've got $215 million that are currently being managed by their software. And they actually maxed out at 300 million. They had a crash. This was, I guess, Corona hitting around. Oh no, this is let's look at all year how they look. So they're up. This was like a spike in the market. The market is pretty volatile, so it has a lot of these upward and downward swings. But the general lines, if you ignore the day to day, everything is up and to the right. So you can see here they went from, just this is let's see if we can view this over all time. When I first spoke to them, they were probably around here. They had about $10,000 that people like myself put into their platform to just, to use the service that they had provided. And then today, that $10,000 over not a long period of time is now currently at over $200 million. So these are just amazing stories of just what people, another story is Uniswap. So the guy that created Uniswap, guys and gals, that created Uniswap, he wasn't even a programmer. He just saw that there was a problem that he wanted to solve, which was that he wanted to make it really easy that anybody could put money into a platform to be traded, and then could earn some fees off of that, because it's really hard to be a market maker in financial industries. You have to be dealing with a lot of money. And here's kind of the general theory is that, why is it that somebody like, a company like Goldman Sachs or JP Morgan, why is it that they can deploy capital and that they can safely earn 30 to 40% interest annually on it? But you or I, if we only had a few $1,000s, the opportunity that we have that's safely available to us is that maybe we could get 0.5% or 1%, or if we're really lucky, we can get 2%. It's because the current financial system is really rigged to ensure that the only real opportunities that are available in the world are to the top 1% in the world, and that the rest of us have to kind of just settle for the slim pickings. What decentralized finance has done, and what cryptocurrency and what blockchain has enabled, is the creation of, it doesn't matter on Uniswap, it doesn't matter how much, it doesn't matter if you come and you put in $40 million, it doesn't matter if you come and you put in $40. It's available and accessible, and everybody gets the same rate. And today, that guy who was not a programmer but spent 6 months just learning how to program, he built a platform that has $2.72 billion locked in it. That's earning. Let's see, how much is he earning? I can show you the real-time numbers. Is earning. Where is he on this list? Sorry, guys, I'm just doing this in real time. $348 million on this platform, and that money is being distributed to both to himself and to the people that are putting money in it, whether you put the $40 in or the $40 million in. So it really is an amazing story about creating financial equality. Now, there are problems. It's not all just gravy. And I want to be conscious of the time, so we've got questions for time for questions at the end. We want to say yes to composable open source financial software, and we want to say yes to decentralized autonomous organizations that have sustainable economies. We don't want to just build payment tokens, just yet another Bitcoin. That was kind of the first generation of this, is like, let's all just make our own Bitcoin and hopefully they'll take off. We don't want to just try and use blockchain for our private business and have doctors' offices with blockchain and have shipping yards with blockchain, because it's not the real. We want to build public, open, permissionless financial tools, and we definitely don't want to just take businesses and just add the word blockchain onto it. That's all that kind of stuff is just fluff. It's why the market turned into what we had, the ups and the downs. So Ethereum, which is currently the most popular public blockchain for building interoperable open source financial applications, it's got great momentum, but it has a real scaling problem. Since it became more popular this year, interacting on it transaction fees went from a few pennies to $5 to $10, and some more advanced applications, it even can cost over $50 to interact with it. So it's got a real scaling problem, which has been hit by its own success. It also has a sustainability problem, that the underlying networks of its security really come under question when you look and you see it growing too big. If Ethereum was to be adopted by a country like China, it would just fall apart at its own success. And one part of that is that the ETH token, which represents its security, and the usefulness or the activity on the network don't have a clear connection to the other. And as a result of this, while Ethereum is a great place to build, and there's been a lot of success, especially in the last 2 years, it may end up becoming a MySpace, not a Facebook, an Alta Vista, not a Google. And if you don't know what those companies are, I might be dating myself, but those were the companies that kind of were the first to market, but they didn't become the big successes. Now, the risk to Bitcoin is that there's only 21 million Bitcoin, which is great, but part of what secures the network is a subsidy, and that subsidy is being distributed by the network itself programmatically. Now, by the time over the next about 8 to 40 years, somewhere in that point, which sounds ridiculous, but it's actually in the code, so you can see, the network will come to a turning point where it's either gained enough adoption that fees will secure the network, or it will have trouble. It will not be profitable to run the nodes that make Bitcoin possible. So these are some of the challenges that are associated with Bitcoin. Now, something that's interesting on the backdrop of the challenges to Bitcoin and Ethereum is that China is actively pursuing the blockchain race. China wants to become the next superpower in many angles. China just actually issued a digital currency, the first digital currency, and they randomly selected citizens in Shenzhen, and they distributed about 10 million yuan. This happened last week again. That's about a $1.5 million. And they're only going to grow from there. So what we're going to end up with is we're going to end up with a society which primarily pays for things using their cell phones. And when businesses interact, there's going to be a lot of interest. Instead of interacting with one country or one sovereign currency, where there are home base advantages, the idea of non-sovereign currency becomes more and more important as we migrate towards a digital currency. So we anticipate that the paper money that we're using is going to be replaced over time with digital currency, and that as we have generations that are raised purely on digital currency, all of the innovation, the businesses that are that were mentioned over here, these are going to be the first companies that are able to capitalize on this transition. These and obviously the companies that are built in the future here, maybe companies that you guys will build. So, gosh, that link. And I'm going to remove that. And let's see, where are we here? So we see here that native is a competitive advantage for China. That whereas Ethereum was essentially created in New York, and most of the developers are in California, California and Europe, a little bit in New York. They have a growing scene there. But we see just historically that what succeeds in China usually has a foundation in China. So that adds a lot of reason why when you look at how China is already more advanced in their issue of digital currency, they're already building a cashless society. It's very reasonable to believe that what has success in China will be a blockchain that comes and is natively focused on the Chinese ecosystem. So one of the companies, and this is a company that I invested in, they're called Nervos. They produce a currency called CKB, and they're designed to be a sustainable multi-chain asset system, which is a public decentralized blockchain that is designed to last thousands of years and to be able to handle a global throughput. So it takes some of the best parts from both Ethereum and Bitcoin, and it enables their core value proposition to really come to fruition, learning from some of the structural mistakes that were created back in 2009 and 2014. What is this?
The Nervos Common Knowledge Base, or CKB, innovates on Bitcoin's proof-of-work store-of-value security model.
Can you guys hear?
Bitcoin's proof-of-work has delivered ever-increasing security for more than 10 years without a single successful hack. Miners are paid a fixed BTC amount to secure the network, and as BTC's price increases, so do the rewards, attracting more miners and increasing security. Smart contract platforms, like Ethereum, support multiple assets, expanding the scope of blockchain applications. But when these assets increase in value, there is a greater incentive to attack the platform, but no increased incentive to maintain security. This is because security is paid in ETH, and the price of ETH is independent from these other assets. To be a multi-asset store-of-value platform, the security of the network needs to grow with the value of the assets it protects. Nervos CKB does this by capturing the total network value through its native token, the CK byte, which entitles their holder to storage on the blockchain. In this way, it is equivalent to land ownership. As demand for land to store assets on CKB increases, demand for CK bytes is expected to grow as well. Landowners are taxed for space occupied, while token holders are protected in the Nervos DAO. As more assets are stored, CK byte demand is expected to increase, raising security and raising the attractiveness of storing valuable assets. In a decentralized future, a multi-asset blockchain's value will come from its ability to safely and securely issue and store assets. Sustainable security for a Layer 1 multi-asset platform is therefore essential for long-term success. Much like Bitcoin's network effects and first-mover advantage to become the de facto universal store of monetary value, as the first truly multi-asset store of value platform, we see CKB becoming the universal platform for store of assets. CKB, the multi-asset store of value focused smart contract platform.
So that is this is really what happened, and I'll tell you kind of my personal story here. Is that I recognized the many of the challenges associated with Bitcoin and with Ethereum. I wrote them out, and I started trying to design a system that compensated for these challenges. Once I designed that architecture, I said to myself, it's impossible that I'm the first person to ever recognize these problems. So I started looking at who also recognized these problems and who was building something to fix these problems. And that's when I found Nervos, which was grown out of China, has partnerships with Chinese banks, is part of the blockchain network in China, and is rapidly growing. Now, we got more people coming. Okay. Okay. So there's opportunities for developers and entrepreneurs to build and capitalize on this. The Nervos Foundation has established a $30 million grant program for entrepreneurs to build infrastructure, to build applications, to help grow community, for marketing, and for helping evolve their tools and their infrastructure. So the goal of the program here is to attract talent for research and build tooling and develop solutions for Nervos. Now, the way that it works is you come up with an idea of something that you'd want to build. First, you just get involved in the community. That's on Telegram and on Discord. Then you look at some of the other things that are being built there. Then you think of, well, what would be something that could work on a global scale? And then you approach the grant program. And there's also, and they've given out millions of dollars so far since launching the grant program last year to people all over the world to build applications on Nervos. And it's super early. So they've also created a global incubator, which is called the Nervos Common Knowledge Labs. So it's designed to provide a resourceful, engaging, and effective support program to catalyze early stage projects and help build a thriving ecosystem. Okay, I got another question. Let's see what that is. How viable to build a communication app on Nervos? So it's a layered blockchain infrastructure. So you would build it not directly on Nervos, but you'd build it on a high throughput bridge that runs on top of Nervos. But absolutely you could, but you'd want to keep in mind that you'd want to incorporate some type of payment mechanism. That the primary value of blockchain is to move money around trustlessly, or to move scarce digital assets around trustlessly. So a pure communication system would need some more of a thought as to how to capitalize a lot of the services that are built within this infrastructure. So they provide funding up to $100,000. They provide the network effect that they can get your they can get your application in front of tens of thousands of people, and they provide developer support to help you overcome problems. Um, and So that's it. My email is karis@lionchain.capital. You can find me on Twitter, where I'm very active at MadCapsLaugh. I put together um, here's a link to the Discord, and then I also put together a great wiki on Gitbook, which is basically just a collection, from a lot of different places. Here's the different Discord channels, the Telegram channels, Twitter, the newsletter, podcast. It talks a little bit about how to get started building it. There's the video that we just saw, some of the multi-layer architecture approach, and a lot of other resources. So I'll give you guys this link as well. But that's what I got. I apologize that I went over time. I know we've only got about 10, 12 minutes. I hope you enjoyed the presentation, and I'm happy to take questions now or take questions later.
Thanks, Jonathan, for the very detailed technical presentation. I think it was a great informative one. I don't think that you ran out of time, because you answered most of the questions while they were presenting on the chat. So that's very good. I want to ask if anyone else have any more questions. So it's your time either to speak on the mic or to write questions in the chat. Also, if you want to write in Arabic or speak in Arabic, that's fine. So anyone else have any other questions, then so please, it's the time. Anyone? Okay.
I actually have many.
As I said, I think Jonathan.
So, yeah, Raid, if you have any specific questions about blockchain technology, happy to answer them.
Okay, so no more questions on the chat. Thank you, Jonathan, very much for joining us today. Thank you for the great presentation and the links. I think it's very important for the community to know more. Thank you, Mr. Vakar, also to joining us today. Thank you all, and looking forward for future sessions and to hear successful stories from everyone in their use of Bitcoins and cryptocurrencies. Thank you all, and have a great day.
All right, bye.
Thank you all.
Bye bye.
Bye bye. Bye.